Okay, well, Dean Kim is head of global research product at William O'Neill and Company. He's joining us now to take some questions. Dean, good to have you with us here. Thanks very much. Good morning. I mean, you know, as they say, one of the rules of at least technical analysis is buy strength, right? And the market is looking strong. The Nifty Bank closed at a record level, got to almost the all-time high. Practically, we were there yesterday. The Nifty is about less than 2% away. What's your sense on things here in India?
Well, I think India, we have it as a confirmed uptrend. Is the only one of two. The other one is Japan. So it's looking really great. And I do see a lot of stocks sort of setting up in various areas, particularly financial. We do like HDFC Bank, Kotak Mahindra, ICICI. But also there are other banks like State Bank of India. It looks like it's coming back. IndusInd Bank, Axis, all of those are setting up well. So that's one area that is exciting to see that, you know, for the first time in a long time, these stocks are setting up. And then, of course, you know, we still have some cap equipment names in India that continues to do well. Auto manufacturers are starting to pop up. So Tata Motors is extended, but I think Maruti, Suzuki, as well as Eicher, Ashok, UNO, Minda, these are all stocks that are setting up. So, you know, the breadth of the market is impressive. It's getting wider.
Okay, so you spoke about a couple of stocks, right? In the banking space, HDFC, Kotak Mahindra Bank, and in the auto space, Maruti, Eicher, and names like UNO, Minda. Dean, good morning. Where else do you see leadership emerge? Do you see any of the IT names come back on the radar? Because they've been largely underperformers for the last 1 year. And what about other heavyweights like Reliance Industries?
Yeah, IT stocks are still needs a lot of work. You know, they do follow what's going on globally because, you know, they do work with global companies. And, you know, when you think about US, which is a major customer of Indian IT folks, basically we're heading into potentially a recession. So I think the market is still, you know, skeptical in terms of whether Indian IT companies can really outperform. But I think that's probably going to start to show some life, I would say second half of the year, when the market is able to digest what's going on in the US. So US right now, you know, we're sort of in a choppy mode, but the markets are acting well.
Hi, Dean. Good morning. You know, you track the S&P 500 rather closely as well. What are the levels you're looking out there? You know, I have an interesting data point that I was reading online overnight, and that's, you know, stripped of AI-related stocks, the S&P 500 actually would be down, you know, it'd be around the 3,800 odd mark instead of the 4,100 odd mark. So how are you seeing that index shape up? Because, you know, you had mentioned in the past it was getting closer to resistance zone.
Yeah, you're right. I mean, the market is constructive at the moment because it is trading above moving averages. But what we do worry about is the breadth. So currently only 34% of New York Stock Exchange stocks are trading above 150-day moving average. So we do need to see breadth of the market improve before we can call it a trending market. The other problem we have is large cap continues to do a lot better than small cap stocks. So we have yet to see improvements in small cap stocks, particularly for regional banks, which continues to run into heavy resistance. But, you know, we are seeing some pockets of stocks that are performing well in technology, retail, consumer staples, while consumer cyclical, basic material, financials, and energy are lagging. So breadth is definitely a concern. In the meantime, you know, we want to see both S&P and NASDAQ continue to hold above short-term moving averages. Now, if they do correct and they fall below 50-day moving average, that's when we're going to start to be worried because now you're introducing, you know, further resistance up, you know, above you. So I think it's critical for both indices to, you know, trade above 50-day moving average.
And on the S&P 500, that would be?
Yeah, so S&P, the next support is 50-day moving average, which is 2% away. Resistance is at around 4,200, which is a recent high in April.
And you know which are the biggest AI stocks, right? We talk about, and it's crazy. It is Facebook, Apple, Amazon, Google. I mean, you'd think there'd be some, smaller companies we've never heard of, right? But when you want to make a AI basket, I mean, these are the guys. I mean, the mega caps, the FANG stocks is what is actually leading it.
I think usually you don't 500, there are a few more as well.
I mean, there's Nvidia, and but the largest proxies are some of the largest companies in the world, which is quite stunning because innovation usually comes from smaller startups, etc. But here, these guys are the cutting edge, the bleeding edge, whatever you want to call it. Dean, just a quick last question from my side. You identified, I think, some names like Uno Minda, etc. So, what are your top 5 or 6 momentum-based stocks here in India which you'd like to buy, which you're comfortable buying, if you want to name them?
Yeah, I think I like the banks. I think HDFC Bank is always a solid company. And then I would say Apollo Tires, that one is breaking out. Bharat Electronics, and I would say something like Sarah Sanitary Ware. That's sort of in the consumer space. We haven't seen a lot of stocks coming up in consumer, but that one looks like it's breaking out.
All right. Can you leave us with one target on the Nifty? What is your year-end target looking like now that, the momentum has kicked in big time? And where do you see the floor for the market now?
For support, I look at the Sensex, and obviously the next support is the 10-day moving average, which is only 1% away. And then you have the rising 21-day moving average. So I would look at those as support levels. In terms of upside, that's really difficult to tell because we as a firm at William O'Neill, we're not in the habit of forecasting markets or levels. But I would say, right now there's very little resistance. The only resistance I see is at around 63,500, which was a December high. And if the index can break above that, then you have no resistance. So, the only thing I do worry about is, it seems like China data just came out and they're coming in below expectations in terms of, industrial demand as well as retail sales. So that could have some impact for rest of the global markets. But in general, it's good to see Chinese markets sort of trying to get above the 200-day moving average. We'll see in the next couple of trading sessions, but I would look at that as a cue in terms of what may unfold for the rest of the globe.
Okay, Dean, thank you for stopping by and speaking with CNBC-TV18. Always appreciate your thoughts, especially when, the market momentum is looking good. And that's something that perhaps can continue. That's the word coming in from William O'Neill. Let's slip into a quick break. There are plenty of stocks to talk about. So many numbers that came through in the last 24 hours. We'll talk more about that in just a bit. Stay with us.